what they basically did, super interesting, they said, okay, what would happen if we would take some of the DeFi primitives and we would run the US stock market on top of it? And what they find is on the slide. There's billions and billions of dollars that actually could be saved by replacing some of the legacy technology with DeFi. Now, that is a reason for all of us to pay a little bit of attention, I think.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video, we're going to be diving into a breaking fundamental development from the SEC, confirming that liquid staking and the rewards from liquid staking do not classify as a security. This is a video breakdown you are not going to want to miss, as we are seeing massive ongoing developments, laying a clear regulatory foundation for the development of the DeFi ecosystem. As always, we do appreciate the love and the support. Do us a favor, if you enjoy these thorough video breakdowns, smash that thumbs up button and subscribe to the platform. So starting off here, because we have so many panel discussions to go over today, and we're going to thoroughly read through the updated announcement from August 5th from the SEC on liquid staking. I said here for you guys, massive confirmation just dropped. The SEC has officially clarified that liquid staking activities and staking receipts tokens do not involve the offer or sale of securities when done properly. This means that liquid staking is not a security. You do not need to register these activities with the SEC, and major regulatory clarity just landed for DeFi. And guess what just went live at the same exact time? XRP liquid staking launching on Firelight.
Firelight, the staking protocol that's being built on Flare, enables varying degrees of interaction for different parties. So for both individuals and institutions, staking of XRP is available in terms of being able to put your XRP to work in infrastructure. And we'll come on to use cases around that in a moment. But Firelight will also enable institutions to put their XRP to work in quite sophisticated financial products. And that's a kind of separate but interesting and related area.
And we've also seen lending and borrowing for XRP going live on mainnet on Strobe Finance.
That's right. So far, XRP Ledger has been focused more on, let's say, payment solutions for businesses or institutions. But right now, they're making a move. And what is very important right now is that there's a lot of dormant capital sitting at all those CXs. XRP's market cap is hitting above $100 billion, but only a few tens of million dollars are actually available on XRP Ledger right now. So the rest is actually outside of XRP Ledger. So all those money, all that money is actually available for us to do something about, right? Yeah.
And so following on from that, with that door now being opened, could you tell us a little bit about what Strobe is? What does it do? How does it work? And how people can sort of put their assets to work through it?
Right. So Strobe Finance is a decentralized liquidity and yield protocol. So it is designed to unlock both retail and institutional DeFi opportunities on the XRP Ledger by taking advantage of the newly developed EVM sidechain. So Strobe's flagship product will be our money markets, where we'll be providing yield-bearing infrastructure to XRP holders.
And then also this year, RLUSD launched on Aave for lending and borrowing. The rails for a compliant DeFi ecosystem on XRP are being built in real time. Staking, lending, borrowing, and liquidity strategies are all coming together. This is not speculation. This is the regulatory green light and infrastructure rollout in perfect synchronization. The institutions are watching, and the question is, are you? We're still living in an era where influencers and individuals on the internet with zero credentials are still knocking DeFi and claiming that it's some scam, that it's never going to be regulated. However, the regulators are in fact telling you all the complete opposite. And here in the CYPRX Wealth 28 Club, we have been ahead of the curve this whole entire time. Now's the time to stay informed, stay prepared, and earn yield. So we're going to dive into Paul Atkins, who just recently said the other day at an SEC-hosted event.
So third, a key priority of my chairmanship is to allow market participants to innovate with super apps. I'm often asked, what do you mean by a super app? Plain and simple, securities intermediaries should be able to offer a broad range of products and services under one roof with a single license. A broker-dealer with an alternative trading system should be able to offer trading in non-security crypto assets alongside crypto asset securities, traditional securities, and other services like crypto asset staking and lending without requiring 50+ state licenses or multiple federal licenses.
So you have the SEC chair coming out just the other day claiming that organizations should be able to provide staking and lending services without having to register under 50 different licenses, so on and so forth. Now's the time to lock in and educate yourself on DeFi, but don't just take that from me. Take that from individuals with valid credentials. So before we read the SEC announcement from August 5th, as of time of recording this particular video breakdown, it is August 6th. If you're watching this as a recording, it's going to be a few days after I recorded this video. So again, just showing you guys that this information is breaking at time of recording. This video is from 1 day ago and only has 26 views. Shout out to the CYPRX researchers for this. This is exactly why it's so important to be a part of a community that taps into this type of educational research. 26 views on this video, and I'd probably say that half of these views come directly from within inside the private CYPRX community. Tap into the Discord if you guys want access to this type of research that hardly ever reaches the mainstream. So why are we going to be listening to this individual? This video titled 70% of experts agree that DeFi will disrupt finance within the next 10 years and you should be paying attention. This individual has valid credentials. You can see here on his LinkedIn profile, Daniel Labu, hopefully I'm pronouncing his name correctly. He has previous experience from 3 different financial institutions, including HSBC. He was also the head of operations and governance at Barclays, and he was also a project manager at UBS Investment Bank. So I suggest that people listen to individuals with credentials when they tell you things on stage, like what this gentleman is going to say today. So let's just tap in. First, he goes on to talk about how they're in the process of putting the entire stock market on DeFi rails, and that is one of the many reasons why people should be paying attention. Take a second here and listen.
There's an interesting article by Andreas Park and Katarina Malinova. And what they basically did, super interesting, they said, okay, what would happen if we would take some of the DeFi primitives and we would run the US stock market on top of it? And what they find is on the slide. There's billions and billions of dollars that actually could be saved by replacing some of the legacy technology with DeFi. Now, that is a reason for all of us to pay a little bit of attention, I think.
I'd say that that is a huge reason why all of us should be paying attention, considering that the stock market is trillions of dollars. Now, the second thing he talks about is how now is the time to start to learn DeFi, right? Now is the time ahead of this massive wave of institutional demand for DeFi primitives to start to educate yourself, keeping in mind that here in the CYPRX 1228 Club, we have tried to emphasize this, that you do not need to go out and risk your hard-earned digital assets in order to learn DeFi, in order to take a mentorship, to read the white papers, to watch these panel discussions and educate yourself in the now as we're going through this massive digital transformation in the financial ecosystem. Take a second and listen to him.
They're based on the respondents that answered the question with high or very high, okay? So today, the adoption level is pretty much 0, right? In traditional finance, we really don't use DeFi at all. But then, this is the interesting part. In 2034, 43% respond and say this DeFi adoption is going to be much higher. So what does that mean for us today? It basically means that if you haven't already started, it's probably the right time to investigate DeFi and understand it a little bit better.
That is coming directly from an individual with valid credentials that worked at some of the largest institutions in the game, telling you all that just because DeFi adoption has not significantly scaled yet, doesn't mean that it's not going to. 43% of participants that were surveyed went on to confirm that in the future, DeFi is going to be significantly important. So now is the time to get in and learn about it. Last video I want to play from this gentleman here is that he goes on to confirm that DeFi will be a part of the future, and now is not the time to ignore it.
DeFi or in traditional finance, both of us probably should get ready to do something together rather than to say, oh, the other one is really bad. Also note that finance as usual doesn't really feature as a very prominent scenario. So if you assume that nothing's going to happen and this is a fad and it's going to go away, that seems like rather unlikely. So try to strategize for a scenario where DeFi is in the mix, okay? So try to strategize for a scenario where DeFi is in the mix, okay? Maybe you have different views on how big a role it plays, but it's not going to be not there. Many folks believe that there's going to be some sort of collaboration between traditional financial institutions and also DeFi platforms. And then again, there's a smaller group that says DeFi is going to take over the world. Arguably, that's probably less likely. But if you take this all together, what we're saying here is that 70% of the participants really believe that DeFi will be at least causing some sort of disruption over the next 10 years. Let that sink in, huh? 70%, more than 2/3.
Let that sink in. 70% of financial institutions surveyed in this report that was displayed at Istanbul FinTech Week. Again, a video breakdown that was released 1 day ago and only has 26 views. He mentioned that 70% of these institutions surveyed believe that DeFi is going to be disruptive in the next 10 years. And the bottom line is that it should not be ignored. Coming from an individual with credentials, this aligns with every single thing that we have portrayed to you guys over the last year. If you guys are new to the CYPRX Wealth 28 Club, you're new to the CYPRX YouTube, take a second and just go watch the yield playlist on the CYPRX YouTube. There's over probably 70 free video breakdowns of us going over exactly what this gentleman has been saying. That now is the time to learn, now is the time to educate yourself, and there are so many free opportunities for you to do so. Your education should not be ignored. Obviously, of course, if you guys ever want to take things a step further, you want to see live examples, you want to see us going out and risking our hard-earned capital in the DeFi ecosystem, actually deploying on these protocols, showing you all different wallets that we're utilizing, different protocols that we're participating on to generate yield on our digital assets, you can always head over to CYPRXtrading.com, tap into the Wealth 28 Club, and go through that mentorship program. But at least at a minimum, you should be educating yourself, whether it's through document reading, panel discussion watching, going over to the white papers on these protocols and reading, following these protocols on X, and just looking at what they're posting on X on a daily basis, consuming the information so that way when the regulatory environment is firmly and soundly put in place, you are confident and ready to deploy and start generating yield on your idle digital assets. So with that spiel out of the way, let's go down here and let's read over the announcement from the SEC. You can see that this was released directly on the SEC website from August 5th, 2025. And it says, starting off here, the Securities and Exchange Commission Division of Cooperation Finance today issued a statement regarding certain liquid staking activities. This statement aims to provide greater clarity on the application of federal securities laws to crypto assets, specifically addressing a type of protocol staking known as liquid staking. This is huge confirmation considering that staking is about to be a part of ETFs. Not only that, but for the first time in history, we're about to have liquid staking and staking solutions on the XRPL because of the EVM sidechain and networks like the Flare network that are enabling these solutions for XRP holders. This is massive. This is game changing, right? For the first time ever, we're going to be able to earn yield in a regulated environment on our regulated digital assets like XRP. I mean, I don't know about you guys, but I'm super excited about this. Imagine if over the past 5 years that Ripple was in a lawsuit with the SEC, we were able to generate 3 or 5% yield on our XRP that's been sitting dormant in our cold storage wallets. I mean, I don't know about you guys again, but my bags would be significantly bigger if throughout the last 5 years, I was earning 5% on my holdings, and every single day I was able to pull the rewards and compound that back into my bags, right? So now moving forward between 2025 and 2030, we are going to be able to do that. And I feel very bad for the people that aren't going to learn how to do this because they're missing out on massive opportunity gains. So reading this statement on certain liquid staking activities, I only have 3 different highlights to read for you guys. And what I really liked about this statement is that not only do they disclose and talk about liquid staking, but they also talk about the rewards that you're generating from liquid staking do not classify as securities. So that way everybody understands. I'm going to read these thoroughly. Starting off here with liquid staking, it says, liquid staking as used in the statement refers to a type of protocol staking whereby owners of covered crypto assets deposit their crypto assets with a third-party protocol staking service provider. Such owners are depositors, and in return, they receive a newly minted or created crypto asset, i.e. a staking receipt token, that evidence depositors' ownership of the deposit-covered crypto asset and any reward as described in the protocol staking statement that accrue to the deposited covered crypto asset. As a part of liquid staking, staking receipt tokens are issued to a depositor on a one-for-one basis to the amount of the deposited covered crypto asset. Staking receipt tokens enable their holders to maintain liquidity without having to withdraw the deposited covered crypto asset from staking. For example, holders can use staking receipt tokens as collateral or to participate in crypto applications, including those that can provide a return to the holder, although any such transactions are separate and independent of the actual protocol staking activity itself. Staking receipt tokens do not change any of the rights or obligations of the deposited covered crypto asset, such that the staking receipt token are properly characterized as receipts for the deposited covered crypto assets. Depositors can redeem the staking receipt token for the deposited covered crypto asset and any rewards that accrue to the deposited covered crypto asset, subject to any applicable unbonding period. So they're just breaking down for you guys what liquid staking is and how it works. The division's view on liquid staking activities, this is where it gets juicy. It says, it is the division's view that liquid staking activities, as defined below, in connection with protocol staking, do not involve the offer and sale of securities within the meaning of Section 2A1 of the Securities Act of 1933, the Securities Act, or Section 3A10 of the Securities Exchange Act of 1934, the Exchange Act. Last but not least, down here it says, moreover, this is important, any rewards accruing with respect to the deposited covered crypto asset as realized from the protocol staking activities that, as discussed above, do not involve the offer and sale of securities within the meaning of Section 2A1 or of the Securities Act or Section 3A10 of the Exchange Act. This is mind-blowing confirmation that staking, liquid staking, and the rewards that you get from these services do not classify as a security. Ladies and gentlemen, the floodgates are about to open, and these institutions are getting the regulatory green light that is going to allow them to participate in these solutions. Now, again, if you're new to the CYPRX page, this is the first time that you're hearing about any of these things, go back and watch the yield playlist so that way you can see all the developments that have taken place over the past consecutive years and all of the opportunities that are becoming readily available to us as retail investors alongside institutions to generate passive rewards on our digital assets. This is a future that should not be ignored. It is a future that we are headed into, and it would behoove you guys to start to participate in furthering your education as we've been laying claim here in the CYPRX Wealth 28 Club that individuals do. Keep in mind, we do not tell you guys to go out there and participate in these protocols, nor do we encourage you guys to go out there and risk your hard-earned digital assets, which is why we have created the Wealth 28 Club, recording and showing you guys our hard-earned capital being put to work and being put to risk on these protocols, so that way you can learn from our trials and tribulations and our own mistakes. So go out there and start to learn these things, because these developments are happening at a very rapid pace, and you do not want to get caught on the sidelines when institutions start to pick up speed and onboard into the DeFi ecosystem, which they 110% will over the coming months and years as we progress into 2030. As always, bringing you guys some of the realest information in the game. I want to leave it off here on a positive note, giving you guys some motivation, considering someone in our private community mentioning that they made some passive income for the first time ever after going through the Wealth 28 Club. So I said here in this post on X, one shift in thinking can unlock a new reality. Paradigms don't change because the world changes. They change because you do. All it takes is one moment of clarity, one spark of awareness, one decision to see things differently. That's the gateway. Crypto, DeFi, digital assets, these are not just technologies. They're tools for those willing to think beyond the outdated system. You do not need permission. You do not need perspective. Shift your mind and your wealth will follow. Now, if we come over here, shout out to Al in the DeFi chat in our private CYPRX Discord, because they said on August 5th, which is just yesterday, that they just made their first $6 in DeFi. Thank you, CYPRX, for inspiring me to level up my crypto game. And up here, what I said in reply to that is that this is proof that all it takes is a mindset shift and the right education to start winning in DeFi. This community member just made their first $6 using decentralized finance, not by luck, but by leveling up their knowledge to the CYPRX Wealth 28 Club. It's not about how much you start with, it's about starting. Once you understand the tools, the risk, and the strategy, you no longer are guessing, you are building. DeFi is not just for techies or whales. It's for anyone with any amount of capital, with a mobile device and an internet connection, willing to learn, willing to take action, and willing to shift from consumer to active investor. Shout out to everyone putting in the work behind the scenes for your future self, because your future self will thank you. Let's keep breaking financial barriers together. Wealth 28 Club. So, as always, bringing you guys some of the realest information. I cannot stress it enough that now is the time to further your education, whether you take the free route or the mentorship route. Go out and start learning. Start educating yourself on how to get your digital assets working for you, how to survive long-term in this space, 2030 and beyond, as we transition from this outdated, old infrastructure to this new digitally native Web3 infrastructure. DeFi will 110% be a part of this new financial system. And again, it would behoove you guys to lock in and pay attention. If you enjoyed today's video breakdown, do us a favor, smash that thumbs up button and subscribe. We do appreciate the love and the support. And with all of that being said, I will see you guys in the next video breakdown.